Hello everyone. Today I will talk a little bit about how I analyze a company for my dividend portfolio. But right now you can see my portfolio is the beginning of a week, and currently most of my stocks, my shares are profiting. There is one Walgreen Boots Alliance. It's on a minus 8%, but recently Walgreen Boots Alliance increased their dividend basically to keep their investors. But what I want to talk about today is a company very well known called McDonald's, which is a great example for today's video because it currently yields a $4.91 for one share, which is good, but it is great example because it shows that a company does not have to meet all the criteria always. So let's see why. First of all, let's go to a Seeking Alpha, type in a McDonald's ticker, and you will get this. In the section of the dividends, you can see that McDonald's is currently on a 43 years dividend growth streak, and their payout ratio is 87%. The dividend growth streak is good for me, which means that they only have 7 years to go. 7 years, I think, to become a dividend kings, so I think they will chase it. So that's a plus for me. Other thing, the payout ratio. You can see it's a bit higher right now, but it's higher because of the current state of the economics. Because a crisis right now, they have less money, so most of their money are going to dividends. But I think it'll establish throughout this year. That's from this side. I usually don't look anymore on this side, just these two basic things. Also the annual payout, but that's after I decide to buy the company. Okay, so let's go to the McDonald's Investors Relations, which is their site oriented for investors. And here you can see their growth strategy. We will talk a little bit about this. And you can see their scales, proxy statements, and recent news. Recent news, this is very important. I read all of these, and it is what helped me to decide if I want McDonald's in my portfolio or if I don't. So first of all, let's go to their growth strategy. Here you can see that in the March of 2017, the McDonald's introduced a velocity growth plan, which is highly focused on I think improving their system, yes, and it is based on three main pillars. The important thing for me is that they established a delivery service. In my country, it started this year. The next thing I look at is in the recent news, as I said before, and these important things. The McDonald's reports April and May 2020 comparable sales and providers, and update on COVID-19 impact to the business. So I read both of these, and wait a second, I read both of these, and basically what they are saying here is that they plan to continue with their velocity growth plan, but the COVID-19 has significantly disrupted the McDonald's business. The next important thing is that 75% of their restaurants remained operational, and they are focusing on a drive-through delivery and a takeaway. But the situation is improving because currently they have 99%, or as of April 8th, they had 99% of their companies, of their restaurants open in the US, and in the international market it was international operated markets 45 and international development license markets 75. The next important thing is that McDonald's raised a 6.5 billion debt, but McDonald's is well known for their for how they handle their debt. They use it very well to grow their company, and they stated here that they would like to use, I think, $200 million to improve their system in the company. The next update on the COVID state of the company is well, better, because the COVID is, well, it's not that active, or it is active, but in the month of, I think, May and June, the cases went a bit down, and they basically remained open 99% of their restaurants in the US, but they had also improved in other in international market, which means that this company is slowly recovering from a current situation. The last important thing for me in this report was that McDonald's said that they will use the money to help the McDonald's restaurants that are located in the most dangerous countries, such as Brazil and China, I think it was, and also the restaurants located in shopping malls, because they were closed because of the government statements. Okay, let's go to the last thing, and that is a McDonald's financial statement, which I look at on a macro trend. In the income statement, I look at three things. The gross profit. Here on the graph we can see that there is a clear upper trend, which is good for us. Since 2009, their gross profit has gone up. I know that they were profiting a bit more here since 2011 into 2014. I guess it was the time of McDonald's, or how can I say it? Everyone talked about McDonald's and went to McDonald's, you know. And the next thing is net income. Here also, apart from these years when it was a big boom, McDonald's was a big boom, there is an upward trend as seen on the graph. The last thing I look at is earnings per share, and here we can see that since 2015, I think, the earnings per share grow also. From $4.80 it went to $7.88, which is really good. And the next thing, balance sheet. And the balance sheet, I am looking into assets and liabilities. I'm comparing those two, and from a previous video I said that a company should have more assets than liabilities. Well, here McDonald's has less assets than liabilities. You can see here that they have 47.5 billion assets and 55.7 billion of liabilities. But a big amount of their liabilities are created by a long-term debt, which you can see here is a $46.875 billion, which is almost the amount of their total assets. But as I said before, McDonald's is good at handling or working with debt to grow their company, so I'm not too worried about that. And also McDonald's is focused into paying dividends, and you can see it basically on the next cash flow statement. And it can be seen here that even though their net cash flow was not that big, they were increasing their dividend year by year. So that's the next thing that indicates, at least for me, a great company that is focused on paying dividends, and they believe or they reward their investors for trusting the company. Yeah, so all in all, The McDonald's for me is worth the risk, so I will buy it into my portfolio, and I think it will be soon enough, next month, maybe in the middle of a month somewhere, because here on the graph on eToro you can also see an upper trend, but it will grow even more. It's a huge company, and they are here for many years, and they will be here for many years. Yeah, so that's all, guys. Thanks for watching. Leave a like, it will help me and I appreciate it, and follow me on Instagram. Goodbye.